I changed it. Can you hear me? Um, so I'm going to go over how I'm going to trade US 30 tomorrow. And I'm going to go over how a couple of pairs that I'm looking at right now um, that kind of been like hanging around, like where I want to get into it. Um, right now, I think a couple of people that's in the chat, they were actually looking at it with me right now. That's GJ and UJ right now. I think I might have just got pulled in a trade on GJ, and then I'll just go over why I right now. I'll just go over why I got in this trade right now, and I'm just looking forward to get to this. So first off, this GJ right here I'm looking at, and the way I'll just go over like why I've gotten into this particular trade just now, and I got in this trade because if you look at GJ on the weekly, um, look at GJ on the weekly. I'll explain what all this garbage look like. It's not garbage, but it's actually great information. Um, so we can already see GJ's like coming from a downtrend, and this on the weekly, obviously a downtrend, and right now it's consolidating a little bit. So my logic was to try to get into this continuation downward, but if you look at on a daily, it's an uptrend right now. So I was gonna try to buy it until I can get up to this trend line from on the weekly view, and then try to get in that continuation to the downside at some point. But for a short-term play, my play was to trade it for a quick buy. This particular day gave me a signal that this uptrend would continue. So that's why I'm looking for a buy right now, because this was actually bad news on this day. This was this particular day was Brexit, and if you look at GU, you'll see the same view, same kind of candle on that day too over here. You got I think it's this day. Let me see on the hour. Yep, same, looks basically the same, right? So my logic was that if it reacted to all day long, everybody was selling this off, and it broke this trend. So it's like, all right, now it's going to the downside. Like everybody was thinking like, oh, I'm just gonna keep shorting this, but we got this rejection at this, what I call a swing point right here on the hour chart right here, and they rejected off of this. So once we start getting this rejection, everybody, the momentum of this that we thought this day would bring by the Brexit vote, it did not react the way that you'd assume that it would. So what we did was what actually ended up happening was that once the Brexit vote confirmed that they were not going to leave the EU, then it actually turned positive. And I think it was just the fact that they finally had a decision made about this, and they finally had a direction. Then the next day, it continued up after they confirmed. This is that day when they confirmed that the prime minister wasn't going to get voted out. She didn't get a no vote. So that caused this day. But this day caused good news, but it sold off because it was actually, it ran up after the good news on the fact that that she wouldn't get voted out. So with this big move right here, I know it was gonna pull back at some point, and I think I told some guys in the chat earlier that we would try to get in at the 50% of this move right here, and you can tell where the 50% is. Let me pull up a new chart so you guys. I'll come back to this chart because this already looks crazy. And so this is GU. Oh, GJ. Sorry, GJ. Where are you? GJ. Where you at? Okay, there you go. GJ. All right. So not on the hour. Okay, so if you measure this move, can you guys see the screen? Okay. Can you somebody type 1 or type a 7 or just a yes or something in the chat? If you haven't, everybody can see it. Okay. Okay. Cool beans. All right. So this particular move, right? My logic was I knew that this big move that came because of that news. I knew it was going to cause. We were going to get a retracement. We're going to get a pullback. And like Oren always says, your key levels are always your 50%, your 618, and your 382. So I took my fibs and I drew out where the 50% was going to be, right? And I knew that I missed it because I'm yesterday and today was a lesson like for me because I was trying to make the market happen, even though it was not really a lot of movement. I was trying to make it happen. Like even though there was no reason for me to be trading this yesterday, because of the fact that hang on, what is this? Because of the fact that yesterday the market was just, I mean, well today when I say that, and I'm speaking of like Sunday night and today going in today, the market was just really really slow. There was really no reason for me to try to trade this, and like I was trying to force it. And during this time frame, I was trying to force it over here right around this price range. And I got like 14 pips out of this, but that wasn't really the move, like because it still hadn't got to that 50% up here at this time frame. I was trying to trade it like right around here. It just got into the 618. I knew it could potentially break down some more. It did. It finally came down to the 50%. And I actually would feel better. And if you look at it on the 15-minute, which is where I like to trade from, you can see an inverted head and shoulder. And that like, because I was trying to force it, like it completely made me miss this setup right here. If you look on my other chart, which is where I'll explain what all this stuff means. I could have gotten into this move when I only took this move right here, right? I only took this little move right here. And I actually pulled out right here. So how many pips was that? Got in here, down at the bottom. Yeah, I got 14 of those pips. But if I had not have been forcing this, I could have got the real moves out of this, because this move was 30 pips. This move top to bottom right here this was 50 pips right here. 60 pips right here. And then this move, which would have been the better of all three of the moves, was almost 70 pips right here. So I could have got both of these, but I was trying to force it. And after I tried to force it so many times, I just took myself out of the market, and I just said, I'm just going to chill today and look for the rest of the setups for tomorrow. But we still got an opportunity, because if you look, we still have not come back down to the 50. Let me go back to that chart. Let me go back to that chart. Okay, so over here, again, we can measure this. We still have not really tested that 50% level yet, right? We got one tap off of it right over here. I feel like we'll get another tap and continue up. So what I'm doing is, what I'm going to do is, I put one order in because I saw it came down to the, I put one order in right now, and I only did that. Let me see something. I'm crossing something over here. What we got? Okay. I put one order in just because I want to test it, but it's a small order here. And the lot size is only a 0.14. It came to the 618. So I wanted to see, because of this little slight trend that's going up, I wanted to test this little trend line right here. So I drew a trend line, and I got 1, 2, 3, and now 4 taps off of it. So I decided to go ahead and test this trend line at the 618. And I'm going to, ride it up, see what happens. If it breaks back, eventually I wanted to get back into this overall trend line right here, which has been running for a couple of days now. And I would like for it to come back above here. So I'm going to be looking to try to stay in this trade until we get to at least the 4,200. And we are looking like we're about 70 pips away from there. So I'll see. I'll see where that one goes. I'm looking for a same type of play with GU. I'm looking for the same kind of play. That one's looking, the chart's looking the same way. And I like to trade in clear uptrends or clear downtrends. I don't really get down with like ranging markets, like, because I mean, you can trade a ranging market, but you just put yourself in too much of a risk to make a mistake. So I like to look for something that's clearly doing this, going uptrend. It's going up. We got a lower low, higher high, lower low, higher high, lower low, higher high, and this same pattern repeats itself. That's how you know you're in an uptrend. And so right now, I just created a higher high, and then this is my lower high right here. My lower high right here. So I know that this is still a valid uptrend for now. And then I'm looking for it to make its next higher high at some point above this wick right here. On the on my other chart of UJ, you'll see on my chart I got a bunch of little lines that have names for them. So when I draw up my chart and I'm looking for what I call swing points, and if you look at if you read the book, the Candlestick Trading Bible, that book talks about swing points, and what swing points are basically are just consider the swing points like stairs. If I'm going in an uptrend, if I'm in the uptrend and I'm looking at this trade and I'm on, let's see, GJ is, let me look at GJ on the hour. If you think about a stairwell, right, there's swing points, and think of the swing points as the stairs, right? If I'm at the bottom of a trend, I'll need to get to the next stair to go up, right? So I'll look for my next swing point, and that's this level. So I can go up to this stair, and now I can go up to this stair, and now I can go up to this stair and this stair, and so on. Those are my different swing points. And I'll look for those swing points on the different time frames, because depending on the time frame, the stronger that swing point will be. You'll get a a larger reaction to a swing point on a higher time frame if you're trading it on a lower time frame. So if I'm trading on the 15-minute and I'm nearing a possible swing point on that's from an hour or 4-hour chart, I'm going to likely have a reaction to that particular area. And when I'm looking for swing points throughout the chart, I just basically start at the weekly, and I'm looking for bullish engulfing candles. You can't see it. Sorry, this is already drawn up, but let's look at it on an empty chart. Sorry, I got so many open. So GJ. So yeah, so now I'm looking at it from a higher time frame, right? So as I'm looking for as I'm looking for swing points, right? If I got a bullish engulfing candle, and if you look down, I add volume to my as an indicator. I add volume because volume implies that there are sellers and buyers in the market. There's a lot of sellers and buyers in the market at a time. So I look for those swing points by looking at the bullish engulfing candles that have a lot of volume with them. And you'll see that if I add a swing point here, that'll be my first swing point. I label mine so that way I know where I am and what I'm looking for. On the lower and higher time frame. So I just, because you can usually leave these here and you don't have to ever move this, because I could take this back and go back for months and years, and there will probably be movement around this area, like downtrend market structure right here around this area. And then I could take the trade down to the next bullish engulfing candle right here. This is one right here. This is a bullish engulfing. That was a bearish right here. If I'm trading around this area, I know this is a defined area of support by the swing point, right? So if I came back and I wanted to take a trade off of this at some point later on down the line, I have an potential entry here. I have another one here, a bullish engulfing right here. A lot of volume for it. It may not look like it on this higher time frame, but if I go down to the lower time frames, I got another one here. I can keep scrolling. I can scroll back these swing points from years. This is 2011. And we got structure right here off of the one we just drew up. We got structure around this one that we drew up. This one's a fail, and this one's a fail. This is a break and retest at that same swing point right here. I could take the break and retest here with have this candle right here. Here's a attempt to break this zone, this swing point. Here's the breakthrough. And then this little candle right here is the retest, and that's where you take the entry right here. And if you take that entry, you have the opportunity. Hang on. You got the opportunity at that point to be in this trade for, look, you got opportunity to close out right here. It created another entry point for you. That's where your teacup is. Right here, inverted teacup that Mr. Teacup trades. You got your higher high, you got your lower low, higher high, and then you got your return back to this point. And then another reason why you trade, I like trading swing points. Oh, let me go back, is because of the fact that if you look at it, where's the drawdown? Like, where am I drawdown? Like, if I put an order right here at this point, if I put an order right here, hang on, So if I already got this order in, and it's based off of this swing point right here, right? That's on this line. I put an order in right here. My swing point was found over here somewhere later on down the line. And this would have been my first area. This is where I would have put my order. I don't even have to, I can put this order in and come back months later. This is on a weekly chart, right? Come back in months later. Here's another entry right here. I'm in for this move right here. I can put another one, you know, and I could probably put another one at the body of this, and I got another entry right here. This might have missed it if you left it at that same level. It might have missed it, but if you put it at the base of this, then you get another potential entry, and you can ride this up. You don't even have to get out at this trade at this point. You don't have to. You could have rolled this trade. Hang on. You could have rolled this trade all the way up and really never got out and just take profit if you whenever you felt like it. This is a risk-free trade at this point. You'll see this. You'll see other areas like let me go down to the daily. That's on the weekly time frame. It works the same way on the weekly time frame. If I take the here is another one right here. Let's find another one. So this, you can see this one right here, right? This one's reacting. This one, and let me see. Let's use this one right here. So right now, if I push the market forward, you can really see that this area that we are right now is actually reacting to a former swing point. Like right now, it's reacting to an area that is tested. And right now, it's doing a break and retest on this daily swing point from an area that is from how many days back? This is from August, right? There's market structure right here. You're reacting to something that happened in August right now. And you looking at the potential right now, this is a break and retest right here. So where does it go? You know, where does it go now? We got a potential area of where it could go right here because we got another bullish and bearish engulfing swing point right here. You can even take it a little further and say you got your bearish engulfing right here, but you also got another area got another area to consider too. So sometimes I'll add in this wick right here because this wick, and I'll treat it as the zone right here. This will be my zone. So I'll take entries between this area right here, right? So this would be my potential for where the market could go. Oops. Ooh, don't mean to do that. This will be the potential for where this could go right here. Let me take this off of array. So I would be looking to take this from this where my entry is up to this point right here, at least up to this point, unless I have another swing point that implies that I need to lower my expectations with this. But if I'm trading it from a daily standpoint, and I just want to take this from a daily view, whereas I'm going to hold this a little longer, then I would be looking at it to go to this little zone right here. But since I trade from the 1 hour, 15-minute time frame, that's what I would be looking at. I would be looking at taking it at looking at a swing point from a 4 hour or 1 hour or 30-minute or 15-minute. And everything that I just told you on GJ, it basically applies for GU as well. And that's why I wanted to take those as well, because their charts are mirroring each other within this short-term view. So I'm on the daily. I'm sorry, on the 4 hour, no, 1 hour right here. I'm on the 1 hour. Zoom out a little bit. We got somewhat of an uptrend. It's kind of consolidating over here, but this is where I'm considering my uptrend throughout this area. It's a little rocky, but let me zoom out. All right, so there we go. So I got your uptrend right here. And my other charts marked all up, but again, you got your support resistance. You got your zones over here. And when I'm doing my support resistance, I do the line chart to really find the support resistance. And I look for anywhere there's a sharp point, anywhere there's a pointed edge. So, and that's where I'm looking at support and resistance, right? Anywhere that I see multiple areas where there's sharp points, that's where there's support. Because if I look at it on the candles, you'll see that those sharp points are probably long wicks. And, you know, wicks are important as well, but most of the movement are happening at those particular areas right there. So GJ looks the same. GU looks the same, you know, from a short-term standpoint. And I'm looking to take a similar type of trade. But this one, the only difference is we have had this major move. You can even see on the 15-minute that, like I just showed you, that there was a inverted head and shoulder on the GJ trade. And here goes another one on GU. You got another inverted head and shoulder. You got the shoulder here, and then it's the head right here. You got what Orem called Batman right here, inverted Batman right here. And my even when and where the wick and hits right here is pretty much similar to what GJ looked like. Here is the 15-minute. Just want to take you right back to that again. 15-minute, same. The wick hits the same time over here. It almost looks exactly the same. You see these two long wicks? These two long wicks happen here at this is 10:30 a.m. Eastern Standard Time right here. You got this move happens. This happens at what is this? This happens at this move happens at what is that? G11:30 GT. This one happens at I think that is what is that? 3 I think this is 3 a.m. So this happens right immediately when the market opens. So at Eastern on Euro time. So okay. So you got this move right here, and we had this move right here, and on back on GU right here again. I got the opportunity to make another measured move right here. So this move is 68 points, 64 point. And then I'm looking for the retracement. Still haven't retraced yet. So it's holding this little area right now. And this one I'm looking to pull down probably to the 382 and then try to take a move up. If it holds in this area, I'm gonna look for it to break this area right here. This 29,100 to 29,025 area, and then retest that area, and then I'll look to get in just to play it safe. So that's what I'm looking at on GJ and GU. My favorite pair right now, like everybody going crazy about, is US 30. And US 30 it just moves so crazy. Like I'm actually while I'm talking to you guys, I'm listening to Kim's other session on the US 30 session. I wish y'all could get on, but you got to be in the group. Um, and I'm listening to it in my ear, but I was in another training session this past weekend, and they just confirmed everything. You know, the way that, you know, the way you trade this is you have to consider the fact that you're actually trading stocks, and you're actually trading stocks when you're trading US 30. You're trading the top 30 companies in the United States, and in trading stocks, you trade stocks during the time frame of 9:30 a.m. to 4 p.m. You do have some after-hour trading, but you do have some after-hour trading, but for the most part, most of the volatility in the stock market that happens at between the hours of 8 a.m. right before the market opens, and then 12 noon. And then you have another area of volatility, and that happens between 2 to 4 p.m. Eastern Standard Time. Those are your most volatile time frames of the day. And that's when this pair moves more than anything. That's when you should trade it. Again, my chart looked crazy. Sorry about that. Let me open up another chart. So when I come into, when I'm going to trade US 30, and what I do first is I make sure I know where my 6 a.m. candle is. So I look for the 6 a.m. candle because the 6 a.m. candle kind of gives you like a precursor of what is to come, right? It kind of gives it, the market actually opens to trade at 4 a.m. for stocks at that time. And that's when a lot of big time, the big traders come in, the big companies come in, and they start, you know, giving you an idea of what the direction of the market is. So let me actually move this forward. Let me delete this because I'm gonna mark up this for tomorrow. So 1300 is the 6 a.m. candle. That's the 6 a.m. candle. I marked my stuff up so I know like exactly what's going on, when it's happening, and why it's happening, so I can know what's going on at every time, right? So that's my 6 a.m. candle. And then I take the, I copy this, and then I add in the 9:30 candle. The 9:30 candle is 16:30 on GMT. 16:30. That's when the market opens. That's when the bell rings on Wall Street at 9:30. That's when I'm looking. I'm only looking for trades in between this. I'm looking to actually enter my trade somewhere in between this area, and then let me see if I can push it forward. Like I'm looking for to enter somewhere between this area over here, between 6:30, 6 o'clock and 9:30, and I always want to know where my 10:30 and 12 o'clock candles are, because usually during that time frame you get a good move here too. So let me get those on added on. This is my 14, my 4 o'clock. I think that was it. So, and I'll just correct that. But I want you to just take, if you guys have some time, just go back and just open up the US 30 and just go back and look. Put these vertical lines on any on the hour chart or the 15-minute or the 30-minute, and you'll see that the bulk of the trading is happening in between these time frames. So this move right here, this move happened between 6 and 4 right here. All this is happening between 6 and 4. All of this is happening between that time frame. What usually happens before the market opens, there's just consolidation. You may have some sell-offs like this right here. This is likely because this has reached the zone that it hadn't been to in a while. So you got your sell-off, everybody's taking profit, but it's still in an uptrend. So as soon as the market opens up, it buys right back up. It buys right back up. Then you see consolidation. This is the after hours time frame. You can draw this up. Like, this is the consolidation. This is the sell-off. This is people taking profit. This is after hours. All of this is after hours. All of this is after hours. This is the only day you see any movement after hours. And you're probably seeing that because you haven't been to this area in a while right here. So you got people taking profit right here. But it sells back up as soon as the market opens. All you see right here, consolidation. Don't try to trade this like you do in any other pair, because trading this when it's not during those time frames, you're just putting yourself at risk to get stuck in a move for no reason. Like, imagine you getting into this trade up here, you're like, oh, it's gonna sell off right here. The market's closed, I'm gonna stay here until it's open back up. It's gonna sell off and I'm gonna keep riding it down right here. And you just like, you don't get out because you're under the impression that it's gonna break this area right here and keep going down. And then guess what? You just got pulled out of the trade, and now if you don't have a stop loss, you just lost all your money right there. Same thing over here. Consolidation, sell off right here for the move throughout the day. And I can keep going along the same way and show you like example of it over and over again. That's why I kind of like trading I like trading this on the 15-minute, but my goal is, even though I'm trading it on the 15-minute, is to take like a 2-hour or a 3-hour trade. You know, I just like to enter on the 15-minute. So like as I keep scrolling, just notice like the moves happen around this particular session. Like this session, this is a new session. Like the moves actually happen in here on, like here on. You know, it's just over and over. That's just the market open. You got consolidation, then it moves. You got consolidation, then it moves. And the reason why I'm gonna show you this is what I trade off of. I know it look crazy, but it's a lot of information that you need on here. Like, I know it look crazy. Like, right, Ben. Like, yep. US 30 downtrend day on a daily today. Yep. Kevin said at 1300 at 8 a.m. No, 1300 is not at 8 a.m. 1300. Well, for him, it might be, because I don't know where he lives, you know, so it might be different for him. But Eastern Standard Time, 1300 is 6 a.m. So I don't know how he has his time on his, but that's where I have it at. So it's 1300 for me. But essentially, you're looking for 8:30. You're looking for 9:30 a.m. for the market to open up. You're looking for 12 noon. That's when when all the traders go to lunch during that time. And then everybody comes back from lunch at 1, 2 o'clock. And then they try to get into those moves that happen right before the market close. So that's basically when you're looking to trade right there. So, and then on Fridays, I make sure that I close out my trade on this because I don't want to get stuck in nothing over the weekend. So, and like, you see a lot of drawings on my screen because they all are important. It's all important. Like, so if you look at this, like I got Thursday's close right here. It closed up and it closed at let me get back this. It closed on Thursday at 24,370, right? It was up 0.667%, right? Moved 162 points on that day. So I use that because these the closures of the day, they're usually used as support and resistance on the next day. Like this closure on Thursday was here. You could have entered off of this at some point here. If you're trading this after hours, I don't recommend it, but that's just up to you guys. If you see or you feel comfortable with taking an entry after hours, you could have used Thursday's high as your break and retest area right here. You would have had to sit through all of this, but if you were brave enough, you got this move up. If you were brave enough to move up through this, and then like you notice again, this is the time where I'm trading this area right here. This is my 6 a.m. till 12 right here. I'm only trading during this time. And then, if I likely am still in a trade after that, I would stay in. If I'm moving up, I'll still stay in this, of course. But I usually get in on the 15-minute. Those give me the better entries, in my opinion, and so that you have the least risk, because you'll see that move happen a lot sooner on the 15-minute. Like Kevin and this is a triple rejection area. You would not see this on the 1 hour if you're using this. You will only see this as one rejection candle. So you can use this area to be an entry point right here. I pulled this swing point off of a 4-hour time frame. So I know that it's a strong area, especially if I'm trading it on the 15-minute, like a 15-minute chart. 15-minute candle is not likely to break through this zone without it being like some major news, something major like that. So I took that approach by I took the approach of trading it off of this area, and I wrote this up. This was on I think this was Thursday. Like honestly, guys, I really have only like today, and yes, today's really been my first day that of this year that I really been messing with no, I'll take that back. I traded I've been trading US 30 ever since the year started, and I've been killing US 30. Like I took a couple trades on some pairs. I'm looking. Nobody has any question. You're the only person that's been talking to me, Ben. You and Cam, so that's why. So if you got questions, that's a good point. If you got questions, this is actually an open session for everybody. Like I'm unmuted. Like just unmute. Like this is really open. Like this is not me. I'm not an instructor. I'm just telling you the way that I trade. And of course, please ask questions. You can shoot them in the chat, or you can just turn on your mic and we can have a conversation, because it's probably something that somebody else might have a question about too. So,
all right. So, what do you see? What do you forecast in the next 12 hours for US 30 when it opens up? What do you forecast it to do as far as buy or sell?
So because it's up so high right now, it made this big move. It's gonna retrace, and I feel like it's gonna sell off to one of these zones right here. I don't know which one yet. That's why I'm just gonna wait until that 6:30, that 6 a.m. candle to decide how I trade this. So like right now, you already see it moving down right now. And looking at my chart, the one that I got written all over, right? I got zones or swing points that it could essentially bounce off of at this point. We got this one on from the 4-hour. We can actually use this wick. It could just bounce off of this and move back up. I think it's still going to hold the uptrend, but I definitely see it selling off first, early, selling off early till later in the day, and then in the afternoon, likely it'll pick back up and start back for a buy in the afternoon. Similar to, let me show you another day that it did this. Let me get this one. You had a day like this where it sold off early in the morning throughout the overnight session, throughout the late night session. Then the market opens, then the market opened for trading hours around the 6 a.m. candle. It gives you that signal that it's going to buy back up. And then the market opens and it actually shoots back up. So I feel like it'll start off low. It'll start off low and then sell up earlier. How did you add the volume indicator? Volume indicator on MetaTrader 4 is insert indicators is right here, volume right here. You don't have to change any of the settings. If you want to change the colors, you can change it right here. But I just use the base settings right here. So if you look at January 2nd, and if you want to trade US 30, if you were looking at January 2nd, this is how I feel that tomorrow will look like for it, where you have a sell-off earlier, maybe not this steep, but you'll definitely have a sell-off, and then it'll find whatever zone it wants to trade off of, and then you'll have an opportunity to enter on a retest of the zone right here. So right here, this is similar to how the day would look to me, where you get a double bottom and a retest. You'll get a break of this support line, and it'll hold, and then you'll start seeing the wicks, which imply that the wicks imply that there is a lot of sellers, if it's near support, that are being bought back up. So you got a lot of buyers that are hanging around this area, and then when you got a lot of wicks on the top, you got a lot of people that are trying to buy the market up, but the sellers are trying to push it back down. And let me make sure I said that right, because I was listening to what I said and it didn't really sound the best way. But when you are at resistance and you see a lot of wicks, that is selling pressure. That's sellers trying to push the market down. But you have buyers in the direction of the trade that are trying to buy it up, but they're failing because there are sellers that are pushing the market down. And in reverse, near support, when you see a lot of wicks, you see the fact that there are a lot of buyers trying to buy the market up from that point. And wicks. When you hear somebody say a wick fill, right? You look for those wicks, like this particular wick right here. I would be looking for, if this was going to continue down, I'm looking for a wick fill. And that's where this wick pushes all the way down, it pulls back, and then you see a series of candles fill up the area of where that wick is. I think somebody asked me that earlier, what a wick fill is. And that's essentially what this is right here, where you got the base of the candle right here. Hang on. You got the base of the body, the close for that candle. Jeez. And then you got the low of the wick, right? And these candles inside of here fill up the area where that wick is right here. So you got the base of the candle right here. You got the low of the wick right here. And then all of these candles right here fill up the wick. And that's what a wick fill is. And then you can see it in reverse. Let me in reverse. Let me find a nice one. This one right here. This one right here. So all it is filling up the area of this wick right here. Let me see. So you got the high of this wick right here, and then you got the base of the wick, the candle right here, and all of this price action fills up the area that this wick covers right here. And you could take a trade off of a wick fill too. So it basically is consolidation in this area, and that's called some people call it a wick fill. Some people call it trading an inside candle. You're trading the area that is inside of here, or you're trading the breakout of this this wick. So that's what that is.
No, Corey, didn't you say you try to avoid consolidation trades?
Yeah, I try to avoid consolidation trade. I mean, you can do it if you're gonna be like a scalper. If you want to scalp it, you could take like a trade off of 5 minute, and then the way you would do that is you would box off your trade, box off your the consolidation area, right? Because likely you'll have a candle, or in this case, you got a wick that you can basically get a support and resistance level from. So you got your resistance up here at the top of the wick, and then you got your support down here. And inside of this box, you can trade from the bottom to the top of this area. And you can do that on a lower time frame, or you just find the candle that you want to trade within, right? And it's usually going to be a large engulfing candle, followed by consolidation. Like this one, this is like the clearest one I could see at the moment. Let me see. Let me look at some regular pairs. Um, mm, 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 mm. Um, let me look at a higher time frame. Yeah, I don't see another. Oh, well, here's one, I guess. So here's another example right here where you could scalp this area right here. And this is probably a good little area to scalp. Like, um, it's a good little area to scalp. Like, it's not a lot of consolidation, but or you can trade this one. Like, this one is another good one right here. You can trade within this, and this is a good. I mean, if you trade it up and down, you got a good little move right here. You got what this whole area is 70 pips on the
How,
floor.
how do you how do you calculate pips on US 30? I had a hard time with that.
So if you use a 0.01 lot size, that's moving $1 every every point, right? So if I took this trade and I see that this is 280, this is 28304. If I'm using just a 0.01, that's $28.30 of commission if I take that. And that's using 0.01. If I'm using 0.01. So you take 0.01, multiply it by the first 4 digits, and that's that'll be your profit.
Corey.
Yep.
Quick question about the volumes again. If you go back to insert where you were going to insert the volumes, I think it was at the top because you already had it on there. If you click down to the drop down area under indicators and volumes.
Mm-hmm. Right here.
Yeah, which one did you pick? Which one do you have?
It should be right here. It's not up here at the top.
No, because I think it's only up there because you've added those before.
Just this one. It's
Okay.
just his volume. Still.
Okay.
It's the same way. Yep.
Okay. Thank you.
And you know, I only use I don't really use the volume on the regular pairs, but on US 30, definitely use the volume because I want to know where everybody's in the market, when everybody's in the market, and like, you know, at least for which one of these candles, like what caused this, you know, like how many, like if you looking at the 1 hour, right? If you are measuring, this is measured in millions, right? So this like, I think this is 1 million, 1.6 million in volume per each one of these candles at this particular time frame, right? So right now, there's 1.6 million people that are trading this, trying to trade this pair right now, you know? And why would I try to trade this right now if this is after hours and I'm seeing on average over here, you see there's no volume right here. And it's not really moving. And it's not until that volume kicks up on these days right here in this area down here, looking at this right here. This is where your money is right here. Every single day. This is where your money right here. Like, it's no point of touching US 30 until you get into this time frame when you got your money. All your money right here. Don't touch it until it gets to the money time. Like, because before then, you're at risk. You're at exposure risk. Hugo's way, yep. Hugo's way, the best way. You know, Hugo's way is the best way. Best so far that I've seen. I don't know any other broker. That's all my accounts are through Hugo's way. So yeah, you don't put yourself at what's called exposure risk, trying to just get in a trade in US 30 or any other pair for that matter. Exposure risk is just getting in a trade during down times when there's no volatility. There's nobody in the market at the time. Like, don't trade like euro pairs during none hours of euro. You know, if euro market opens at 3 a.m., then you need to, and you want to trade euro pairs, get up at 3 a.m. and trade those pairs at that time and up until the US cross. And then after that, don't trade it. You know, you need to look at the next pairs you need to look at are the Aussie session and the Tokyo session. That's where the volatility is at that moment. Like, if you're trying to trade a euro pair during London, during Aussie and Tokyo session, there's no volatility at that point because those people are asleep. You know, those traders are asleep. We're up over here, and you know, you'll get some moves. You'll get some moves based off of the people that are still trading here, but you want to try to maximize the amount of the potential that you have to make your money. Like, if there's no point of trying to force trades during times when there's nobody else out there with you, you know, you need help. You know, you need help essentially to like move the market. You know, like, it's not just gonna happen just because you said, all right, this is a good zone right here. I'm gonna enter this right here. You know, I'm gonna enter this right here. You know, this worked out for this particular day. You know, but it's not always gonna happen like that. You know, and most of the time it's not gonna happen like that anyway. So, so yeah, that's what I always recommend that because it keeps you from putting yourself at risk. You know.
Corey,
Yeah.
easy question. Back to mentioning trading during time zones that the pair is in. If I was doing UJ, is USD, is that basically the question is the first currency pair the pair that we're trading in, or is it the second pair that we're actually on that time zone? That
I got a good little diagram to show you that explains that. So when the base pair and the quoted pair, right? So when you are looking to buy something, the strongest pair needs to be on the right. If hang on, let me see what that was. That's UJ. So when you looking at it, hold on, let me clear this right quick. So if I'm looking at buying something, right? And let's say GJ, right? I need to be, and I'm implying that GJ is the stronger pair. Jesus Christ! Sorry, y'all, I got this all drawn up, but like this is how I have to see it anyway. And I'm assuming that GJ is the stronger pair. GU is the stronger pair, and I'm saying that the Great Britain pound is stronger than the US dollar. I need to be looking for a buy. If I'm saying that US is stronger, then I need to be looking for a sell. So if I'm saying that GBP is the stronger pair, all the pairs that are in the left side are weaker than on the right side. So if I'm looking at GU, that's why I look at GU and GJ, because right now my assumption is that the Great Britain pound is stronger than other pairs right now. There's a good site, and I'll throw it in the chart in the chat right quick, and that is called. I think I sent it to you, Cam. Hold on. Sorry, I also program too, so I got a bunch of stuff I'm working on right now. So pair strength, right? Some of you guys might have this already, but if you don't, I'll drop it in the chat, right? Drop it in the chat, right? So this gives you the strength of the pair at the time, but this only goes back 6 hours. So like I said, GBP is weak right now because you shouldn't be trading it right now. And this goes back for the last, this measures the last 6 hours right now. So like, of course the USD is strong right now. This is still kind of like US hours right now. You know, yeah, the market closed, but we got strength from because this measures the last 6 hours. 6 hours ago was 3 o'clock, so it's still pulling in info from that as well. Aussie weak, but JPY is strong right now, so that's another reason why you know, right now, that's why I was telling you that the G pairs will probably sell off right now down to the 50% mark because it's Tokyo session right now. And look, Tokyo session has JPY. So JPY is going to be stronger, a little stronger than the GBP right now. So that's why you get your sell off. That's why you get the retracement down to like I draw right here. You got a retracement possibly down to this swing point, and I count this little wick as a test to this swing point, because though it's not all the way down to this level yet, this is reacting to this bullish engulfing, bearish engulfing right here, and this wick right here. So this created this swing point. If I look at GBPJPY, again on this, is doing the same thing. I got the same wick, I got the same wick, and you see, like, I'm in this trade right now, and I'm wicking off of this area. I pulled it up a little bit. It's probably going to push down a little more. We got another swing point right here on the 1 hour that it could push down and test, but you can already see that though GBP is weaker than JPY right now, you got a lot of buyers right here. That's why I was comfortable putting this trade in, because I started seeing 1, 2, 3 wicks, and that's because it's a lot of people with those buy orders in right now that are here. Let me give you another site. Again, some of y'all I gave this to already, but this site right here, like when I look to trade regular pairs, I try to trade pairs that are doing the same thing. Like this gives you correlation right here. This gives you correlation. This tells you what pairs are moving at the same time. Some pairs, you can go really in depth with this, right? You say you want to trade during Euro hours. Which pair should I trade that correlate with the strongest pair during those hours? Euro USD. What moves along with this, right? And right now, AUD/JPY moves the opposite direction. That when you see a negative number, that's implying that it moves the opposite of this pair. When you see the higher the number is in a positive side, the more it moves in correlation with that pair. So you got EA, right? EA and AJ move the opposite. So usually when I'm trading EA, I'm trading AJ the opposite direction, and I got 2 trades off of that. So I got a trade off of EA that's going up, but I got a trade on AJ that's going down. You see what I'm saying? Or another pair, GBP, I could trade this because it's moving in the opposite direction. I got AJ, I got GJ moving in the opposite direction of EA. So I know that I could trade this in the opposite direction of those, or I could trade in the same direction if I want to trade UCAD right here. This 73% in correlation. If you open up the charts, let's look at EA right quick. Let's look at EA. EA.
Do these correlations ever change? Usually consistent.
They're pretty consistent, but like that's you check it before you trade. I don't just stick with that all the time, because I leave those pairs open all the time. When I trade, I trade Tokyo session and Aussie session most of the time. So I usually have those open. I got another laptop over here that I leave those pairs open all the time, and I can usually see like what's going on with those. So I'll already have those open usually. So, but you can see. Let's see. UCAD is on the hour. Moving on the hour. It looks crazy on here. My bad. That's you.
So NU, New Zealand and USD. If you were trading that in a buy, how does that correlate to US 30?
Let's take a look. Let's take a look. All right. So you said UCAD, right? UCAD.
No,
And
no, no. I said NU.
NU. US 30 is right here, right? Okay, so they don't have it on here. NU. All right, not one of those. Let me show you another one. I don't know if it has it in here. Um, Sonics. I had another site that shows it, but let me see. I'll have to find out how those two correlate, but from what's available here, um, let me see. Okay, here we go. What pair did you say? You said
Yeah, NU US 30.
NU.
NU and
Anybody
US
see it
30.
already? Because I don't see it. I'm like, okay, here we go. Only 10 symbols at a time. You must select one to hide. All right. So there we go. And you can and US 30. Oh yeah, I think those move in correlation with that US 30 pair. Um, US 30 is here. It moves in the opposite. Okay. Moves in the opposite direction.
No,
So
no, no. NU, not UCAD. NU.
okay, hold on. Let me go back up. NU. Did I add it? Thought I added NU. Okay.
Left. There you go. Yep.
Okay. Sorry about that. And US 30 right here. They move in correlation pretty strong. 78%. That's pretty high. So you could trade that in the same direction. If you see what US 30 and it makes sense because again, the US is on the right hand side. So um you would have this going in correlation to it. So that makes sense. 78%. So let's see. I would trade this. Mm, So you will probably not see the correlation on this pair right now because the market for the US 30 isn't open right now. So you'll probably you won't really be able to tell, but you may or you may not. So, but I would check again like during the time when the market is open to look at the pairs simultaneously to see if it's doing the same thing, and you'll see. Like you can already tell this on the 15 minute. Let's see, this one is on the 15 minute. And then this one's on the hour. So let's look at this one on the 15 minute. You got the same wick. You got the same kind of candles. Slight downtrend. You almost got the same look. Like this almost looks the same during this time frame. You got some upward candles. You got some down candles, and then you got some bullish candles. You got some some bearish candles. You got some bullish candles. you got a bearish candle, and then now you got upward movement. So at 78% correlation, that looks enough accurate to me, you know. So I could definitely see myself trading those simultaneously. Let's see. Look, yeah, you can even see it on the hour. You almost got this same downside move right here. And then you got your little consolidation. And then you look like it's going to set up for a buy up or push down a little further and then buy up. Because on this NZ-NU pair, you got support right here near this area on this, and then you got your wicks rejection, so that confirms the support area. So this may push down a little bit, retest and push back up, you know. I don't normally trade this pair because I'm at work, so but that is something I might look at, you know. But tomorrow I'm all US 30 tomorrow. Like that's like right now is 9:25 right now. I am looking for I'm waiting for 9:30 p.m. I mean a.m. Like that's what I want. I'm waiting for these 12 hours. I want US 30, and I'm about to just kill US 30 tomorrow. Like that's what I'm doing tomorrow. And then later on that evening, I'm gonna get in some stuff on AU. Probably I'm gonna see what AU looking like around lunchtime. AU and UJ, I'm gonna look at those pairs and see what they looking at like, because those are my that's what I do after I get off work. I come home and I get in front of my computer to trade the Sydney and Tokyo session. So that's what I'm gonna do.
So if you were to trade US 30, what type of account size would you need to sustain two 0.01 trades?
So if you trade it on the 15-minute chart, you can do it with a small account, but just, you know, you have to trade with somewhat of a tighter stop, right? So and I say that because, you know, you don't want to blow up blow up your account quick. So like I started trading it with a $150 account, and I used tight stops, and I got the account up to the $1,000 that Kim needed. You're not in IML, but Kim is one of the instructors in IML. She recommended $1,000 to start, but I got it up to like 500, and then I added the other 500 out of my account. So most of my account to start to get in this group, I didn't have to use my own money to get in there. So, you know, and if you trade it on the 15-minute, you get better entries and smaller pullbacks. I'm sorry, smaller drawdowns. So like if I took this trade, right? Let me go back to the clean US 30 chart. Cleaner US 30 chart is right here, right? So this on the hour, right? Now, I can't take, if I was looking to sell US 30 and I tried to take this trade and then went against me, I can't take this kind of loss for this week. That's $129. It's $129 right here. Just this one week right here. I can't take that kind of loss. So if I come down to the 15-minute and I trade it, and it goes against me, a wick like that, this long, this wick right here, it's only $29. This is only $30 right here, right? That I can handle. I can handle a $30 loss with no problem and keep it moving, you know, if this goes against me, you know. But at the same time, if I'm on the 15-minute and I enter right here, I'm still in this trade that actually was going to give me 200 and at the top of this move, it's $256.92. I'm okay with that. You know what I'm saying? So that's why I traded on the 15, you know, and that's why I only traded during those time frames, because this is the move I'm looking for right here. I don't care about all this other stuff. I don't even want to touch it right there. You know, this is would have been a good entry. This is the 6 a.m. right here. This is around 6 a.m. This could have been a good entry, you know. Then you have your entry right here. But this gives you the opportunity to actually stay in these trades without that huge drawdown, you know, without having to lose, you know, without putting yourself at risk. Instead of trying to take this 1 hour candle and get pulled out of this wick right here, you know, like that's a lot of money, you know. That's a lot of money to be down, you know. So you don't want to. That's why I traded on the 15-minute instead. Like, and I definitely don't get down on the 4 hour, you know, on this, because a wick on the 4 hour and a wick on the 15-minute, that's two different kinds of money, you know. That's way.
Yeah, that's a long term versus
So
short term.
that's why you know, that's why people recommend to have $1,000 in your account, because you can take a $30 loss on $1,000 account and still be okay. On a $30 loss on $150 account, that's what, 20% of your account size, you know, something like that, almost, you know, almost 20%, something like that. I ain't doing math in my head right now, but a $30 loss on your account, you know, is on a $150 account. That's 20. Yeah, it's 20%. So now you can't trade. You know, now you got to trade with a smaller. You can't trade any smaller than 0.01. So you have to make sure you win on the next couple of trades just to be able to trade comfortably. And then another thing is, because you are using this such a small account, your margin is smaller. So margin on that account is, if you get a margin call on that account, which is on a $150 account, I don't know what your broker does, but you can only lose a max of like $60, you know. So now if you take two $30 loss, that's $60. Now your margin, the next time you take a trade, you can't lose but $12 on the trade, because that will give you a margin call, you know, and it'll automatically pull you out of the trade if you $12 down on your account, and you could have got pulled out of a trade and it went $256, you know.
So back to that margin goal. When you go to MetaTrader 4 and it tells you what your margin level percentage is, and what does it say? Free margin, and then they have margin. Could you explain what that is?
The free margin is what the amount of margin that you have available to lose, you know. That's what your account or your company is saying, that you can stand to lose on your account. When you have a margin call, that means you've exhausted that amount of margin that's available. And as your account, like as you profit, your margin, your available margin goes up. So if I win a trade, now I have more margin to trade with. Now I have more capital to trade with. So now that, like, if I win $30 on a trade, my margin just went up. So now I don't get the $12 margin calls. I can get a margin call that's $40, you know, but it's just based off of your account size and your broker. So
Does that trade need to be closed out in order to gain that margin?
yeah, yeah. You don't gain it until it closes out. And if you get a margin call, it'll close you out of a trade automatically. You might get closed out of a trade, don't even know why. That's because you just got a margin call because your account size. It's a mechanism to keep you from blowing up your account. So that way you don't lose all your money. It's good and bad because sometimes you're sometimes you could be in a trade that actually is right. You in a good trade. It just came down a little further than you expected, and it'll pull you out of the trade. And next thing you know, is moving in the direction that you were supposed to go in, and you just got to take that L. But that's why I recommend just learn more than you trade at the beginning, because you can just keep building your account up. Or if you're on IML, use some of the applications that they offer that help you learn. You can learn, you can get paid while you earn, while you learn, like the Gold Cup app, Luke Longmire's app, Mr. Teacup app, the Harmonic Scanner, all those other apps. Like I don't use those, but some my goal was to I'll probably add on the Gold Cup just because I want to support my upline on that, because my upline is Lizaldo, Mr. Teacup. So I was just gonna get it, and that kind of keep me from doing a little work. Like now I ain't gotta just go through all these different charts. I can just get alerts. When his setup comes up, I can take that setup, or if I don't, if I want to or not, I got the option to take his setup. I trust his setups, and I trust his calls. So yeah, why not get it? That's just less work that I got to do, and but at the end of the day, I can't look at every chart, I can't look at 12 million pairs, and that's kind of why I'm hoping to like get a small group myself, like to like, like Kim says, to you, Cam, you looking at 4 charts all the time, Miss Brenda, she looking at 4 charts all the time. Anybody else, Jayla, you looking at another 4 charts. And after you get to a certain point, I know that if I get a call from Cam on UCAD, and he's always looking at UCAD, I know I could take his trade. I just got to make sure that I, analyze it to set it up the way that I want to enter that trade. But if Cam's always on that UCAD pair, then I know I can take his trades. Vice versa. If I'm always on the pair, and like I'm always on EA, I'm always on UJ, I'm always on AJ, and I'm starting to always get on GJ and GU, So you'll know if I tell you to look at his pair, then you're good, If I tell you to look at US 30, I ain't trying to lose your money because I ain't trying to lose my money. So, I'm not gonna tell you to get in on it if I ain't, analyze this to the full extent, So yeah, that's it. That's it, man. My mouth dry right now, and my wife just brought some food in here, so I guess she implying that I need to eat. So, you guys got any more questions? How did I do? This is my first training session, really. I did okay. Everybody that's still on, I'm turning everybody mics on right now because I don't want to see typing. I want to hear voices. So I'm turning everybody mic on. Give me, curse me
I appreciate it, man.
Yes.
me out.
You did a good job.
You did a good job. Thank you.
We'll never get on here again.
Thank you, Corey.
No problem. You guys, how y'all feel? Y'all good? Y'all got some questions? Some people I ain't even hear from. Okay. All right. Still won't get.
Don't be scared to ask. That's how you learn.
Yeah. Yeah. All right. Well, I recorded this, so if everybody who is on the call right now, I'm gonna drop in my Telegram, right? And before I close this call out, before I close the call out, I'm gonna drop two things, right? I'm gonna drop my Telegram, and then I'm gonna drop my Instagram. And if you got Instagram, you know, the old folks, they don't use it yet, but if you got it, you can add me on there. That's my Telegram. And then this is my IG. And if you ever got questions, ever got any questions, like, go ahead and copy these two down. And then you can come and ask me. I'm also going to I'm gonna start a Discord. If you guys have Discord, that's another good app. I like that app because I can create little rooms. Like one room could be for the traders. The other room could be for just like newbies, and I can drop certain things in those groups. I'll let you know when I create that, and then I'll, again, if you add me on here on one of these platforms or whatnot, I'll drop that stuff off to y'all eventually.
Cool.
Okay.
All right.
All right.
Thank you, Corey.
Have a good night, man.
All right. Thank you, man.
All right. Talk to y'all next time. I'll let y'all know when I'm doing this again. I don't know yet, but I'll give you guys a heads up. Have a good night.